Good morning. I am Malik. And if you thought Friday was just a correction for your portfolio while the index partied at all-time highs, you need to wake up. I was down on Friday, but the market never sleeps, and it certainly doesn't forgive. I have spent the last 48 hours dissecting every single tick of data from Friday's close, and the picture it paints is not just ugly, it is tactical warfare. Welcome to Stock Sense. Today is Monday, January 26, 2026. This is the Monday Morning Deep Dive, and we are going full beast mode today because the trap that was set on Friday is about to snap shut on the retail herd this week. Buckle up, we have a lot to cover. Dissecting the lie. Let's look at the headline number. The KSE 100 closed at 189,166. That is a gain of plus 1,478 points. That is a new all-time high. If you just read the newspaper headlines, you'd think we are in a utopia. You'd think the bulls are running rampant. But open your portfolio. Tell me what you see. If you followed the war trade, if you were in energy, if you were in refineries, you didn't see green. You saw a sea of red. How does the index gain 1,400 points while the strongest sector in the market bleeds? This is what we call the Great Rotation, or more accurately, the liquidity hunt. On Friday, 877 million shares were traded. The smart money, the institutions, the foreign funds, they had a problem. They are sitting on massive profits in energy. They bought ATRL at 400. They bought OGDC at 200. Now with ATRL near 900 and OGDC near 330, they want to cash out. But they can't just sell. If they sell aggressively, they crash the price. So what do? They need a distraction. They need to keep the index green so you, the retail investor, feel safe. They need to keep the euphoria alive so you keep buying. So they sold energy, your winners, and they bought banks, the laggards. They used the liquidity from selling your oil stocks to pump MEBL Bank and MCB just enough to push the KSE 100 over 189,000. It's a sleight of hand. It's a magic trick. And while you were cheering for 189K, they were quietly exiting the war trade. Let's look at the damage on the war trade. ATRL Refinery, ATRL. This was our flagship. On Friday, despite the index flying, ATRL dropped. It closed at 881.67. It touched a high of 898 but couldn't hold it. Why? Because when a stock runs from 750 to 900 in a straight line, the algorithms are programmed to take profit. The fundamentals haven't changed. The diesel shortage is still real, but the technicals demanded a pullback. OGDC and PPL. OGDC closed at 328.83. PPL closed at 272.58. These two are the heavyweights. They didn't crash, but they stalled. A stall on a green day is a warning sign. It means buyers are exhausted at these levels. Now look at the trap, the banks. MEBL Bank, MEBL. On Wednesday, I told you 500 was the resistance. On Friday, it closed at 486.39. It is trying to bounce. It hit a high of 490. This is the bait. They are painting the charts to make it look like a double bottom recovery. Do not fall for it. Until MEBL reclaims 500 with massive volume, this is a dead cat bounce. MCB Bank closed at 420.58. It's lifeless. It's being used purely as an index mover. Why am I still bullish on energy despite the Friday sell-off? Because the world is on fire. Let's zoom out. You cannot trade the PSX in a vacuum. The Malik blockade is not resolving. In fact, reports over the weekend suggest insurance premiums for tankers transiting the strait have tripled. What does that mean? It means the war premium on oil is here to stay. Brent crude is hovering at $115. As long as oil is above $100, the inventory gains for companies like Pakistan State Oil, PSO, which closed at 488.47, and Atok Petroleum, APL, which closed at 622, are going to be historic. But here is the local macro twist: inflation. With oil at $115, the landing cost of petrol in Pakistan is about to skyrocket. We are looking at a potential petrol price hike of 40 to 50 rupees in the next review. What does that do? It kills the real economy. It kills cement demand. It kills steel demand. It kills the auto sector. This is why I say the war trade is the only trade. The rest of the economy, cement, steel, autos, is about to get crushed by energy inflation. Look at Lucky Cement, LUCK. It closed at 491. It looks strong, but for how long? If construction costs spike, who is building? The market knows this. That is why they are rotating. They are squeezing the last drop of juice out of the industrials before the inflation numbers hit. Let's talk about the gambler's den. Lotte Chemical, LOCHEN.
We watched this for the board meeting. It closed at 32.54. The other matters turned out to be a nothing burger for now. The volume is drying up. If you are in this, you are holding dead money. World Call Telecom, WTL, the favorite penny stock of the retail investor. It closed at 175. Volume was massive as always. But look at the range, 175 to 177. It's a zombie. It moves nowhere. Stop trying to get rich quick on penny stocks when the real money is being made in the blue chips. K Electric, KEL, closed at 674. With the energy crisis worsening, KEL is in the spotlight. But KEL is a political football. Unless the tariff adjustment is approved, this stock is just noise. So what do we do today? How do we trade this fake out? 1. The 190,000 psychological trap. The KSE 100 closed at 189,166. We are less than 900 points away from 190,000. The market will try to touch 190K today or tomorrow. It is magnetic. The strategy? When the index hits 190,000, do not buy. That is where the smart money will unload their second tranche. If you buy at 190K, you are providing them with exit liquidity. Instead, watch for the rejection. If we hit 192,000 and then sharply reverse, that is your signal to tighten stop losses on everything. 2. The ATRL re-entry. Friday's drop was a gift. We are looking for a talc refinery, ATRL, to test 870, 875. If it holds 875, we buy the dip. The fundamentals, $115 oil, support a price of 1,000 plus. We are just shaking out the weak hands. Stop loss, a daily close below 860. If 860 breaks, the trend is paused. 3. The banking short. Watch Mizzen Bank, MEBL. If it rallies to 490, 492 this morning, that is a selling opportunity. It is hitting a glass ceiling. The foreign funds are net sellers in banks. Do not fight the foreign flow. 4. The dark horse, OGDC. Keep an eye on OGDC. It closed at 328. It has lagged behind ATRL. If the rotation flips back to energy later in the week, OGDC is the sleeping giant that has 20 to 30 rupees of upside left to catch up to the sector valuation. To summarize, the index is lying to you. The green close on Friday was manufactured by rotating capital out of energy and into banks. This week is about patience. Let the index hit 190K. Let the euphoria peak. We stay in our bunkers. We hold our core energy positions, ATRL, OGDC, PPL. We ignore the banks. We wait for the dip to buy, not the rally to chase. The air is thin up here at 189,000. Oxygen is low. Mistakes will be costly. Stick to the plan. Trust the math, not the mood. I'm Malik. Helmets on. Good luck.